So let's go straight to Paul Welch. He's the chief of SDX Energy, created in October 2015 by the merger of Sea Dragon Energy and Madison Petrogas. They explore and develop and produce oil and gas primarily in Egypt and Morocco. And indeed, Paul is having to jet out to Morocco this evening, so let's get on straight away, and you will forgive him if he has to whip out after his presentation. Paul.
Evening, everyone. Thank you very much for having me. Thank you for that wonderful introduction. I'm Paul Welch. I'm the CEO of SDX Energy, and I will tell you a little bit about our company in the next 15 minutes. So, SDX is AIM and TSX listed. As you said, we were formed in 2015. Since we listed on AIM, which is in May of 2016, we've had seen a significant uptick in our share price. So it was a good deal for us. And I think the last thing we've done that people may have remembered is we acquired Circle Oil's assets from receivership in January of 17. We primarily work onshore, so that keeps our costs low, so we can make money down to about $10 a barrel Brent. Our reserves are shown there, so reasonably good size. I think most importantly, we have a solid balance sheet, $25 million in cash and no debt, and we're generating probably $4 million a month in cash flow with current prices. We do have some financial flexibility as well, because we just added a $10 million facility from the EBRD, which is currently undrawn. So we'll talk about what we picked that up for in a few minutes. We're producing, at the time we last reported our results, about 3,400 barrels a day. Subsequent to that, at the end of August, we were producing closer to 6,000. Our target is to produce just north of 8,000 barrels a day by the end of the year. So over the course of 2018, we're going to double our production. That means we're going to put on South Tassouk, which is a discovery up in the Nile Delta, which I'll talk about in a few minutes, at about 50 million cubic feet a day just prior to the end of the year. And we believe we're well placed to capitalize on acquisition opportunities in North Africa, which takes me to our next slide, which is our announcement that we put out on September 20th about a potential transaction that we're doing. Our shares were suspended at the time. There was enough truth in the leak that occurred that we had to suspend, and so unfortunately this evening I can't talk about that. And so if people can ask me all sorts of clever questions, and a lot of people are trying to trip me up and ask me some questions, I unfortunately cannot answer them. If the deal goes ahead, we will then file something with AIM, and our shares will be no longer suspended. And if the deal falls over, then we'll start trading again. The time frame for that is still uncertain, and when I have some more clarity, I will certainly tell everyone in the room what we intend to do. So please, I appreciate there's probably quite a bit of interest in that, but unfortunately tonight I really can't talk about it. So what I can talk about is our current business, which I think is quite exciting. Firstly, let's talk about Egypt. We have 4 assets in Egypt, 2 oil-producing assets in the Eastern Desert, Masada and Northwest Kemsa, an exciting gas discovery up in the Nile Delta called South Tassouk, and then we have a development opportunity out in the center of the Gulf of Suez called South Ramadan, where we're currently drilling a well. If we talk about the oil-producing assets first, starting with Northwest Kemsa, this is an asset that we've had since 2008, when it was an exploration prospect. Quite a successful asset. It's now essentially fully developed. We're producing just north of 5,000 barrels a day gross. We have 50% of this. As you can see, we are well above our targeted productions for 2018. Our work program is largely complete. And if we look at this field, it's very easy to develop. It's onshore, relatively shallow. We have 2 horizons under water flood, and our operating costs are very low. So we operate at less than $10 a barrel. And if you look at the net back there, at current prices, we're making about $20 a barrel Brent. So it's a great asset. Unfortunately, there's not a lot of growth here. So we essentially have about 3 to 4 years of production ahead of us. All the cash we generate from this asset, we then put back into other ones. So again, this is a great asset. It has been a great asset, but it's definitely seen its best years, and it's going to be declining going forward. So CapEx requirements here are minimal, just workover programs. So again, a real cash cow for us. If we then talk about Masada, our other oil field in the Eastern Desert, this is a slightly different story here. This field is shown there. I don't know if there's a pointer in this, but it's shown here. It's in and amongst a number of fields operated by another producer in the Eastern Desert called Transglobe. We share a little bit of the field with Transglobe. But this field has a lot of growth. So it was originally discovered in 2011, and then in October 2017 we made a second discovery. So if you look on the production figure here, you can see that production growth has been pretty substantial, and there's still more to go. Our work program is largely complete there, and you can see our target production, we're above that, and I think at the moment we're probably another 1,000 barrels a day above that target at the moment. So we've had a lot of good success here. If you look at the next slide, again, another low-cost operation for us, again, onshore. This produces a relatively heavy blend of crude, so we get a Brent price less, about a 30% discount. But if you look at the netback, you can see here, this is a different contract. So this is a service agreement, so the fiscal terms are better. So you can see at $75 Brent, we're making $39 in netback. So this is a real cash generator for us. And like I said, we've had some recent success. And what we're showing here is a map of our Rabble discovery, which is on this slide. It's just up to the north. It's just sitting up in here, and on the gray side in this part of the concession, where we made a discovery in October. We've drilled 4 successful wells with 1 more to go. These wells are drilled to about 4,500 feet. They have anywhere between 100 and 200 feet of pay, and so they come on at between 500 and 2,500 barrels a day. We still see some growth in this asset, and so moving into 2019, we think we're going to have another couple wells here. So again, more growth to come. There are other fault blocks that have yet to be tested. So as we move forward into 2019, we see some more potential in this field that we intend to develop. Okay, if we change gears now, we move up to the northern part of Egypt and we talk about South Tassouk. This is an asset that we picked up in 2013. It's an exploration asset. It's at the southern extension of a series of fields that start in the offshore and come to the onshore. Our thoughts were this trend would come into the block and essentially then truncate. So we picked up the block, we agreed to drill 1 well and shoot 300 square kilometers of 3D. We did that, and thankfully our first well was successful, and now we followed it up with 3 additional successful wells. The last success we had was the Ibn Yunus discovery, which we'll talk about here on the next slide. So if you look at the South Tassouk field itself, what we're showing here for those that are geologically inclined is a well section. We have essentially 3 zones of pay, which are shown here in cross section. This is the field aerially. I think the most important part of the slide is the test rates here. These wells are very good quality sandstones. All these rates are essentially surface constrained. So, you know, between the 3 wells, the test rates are in excess of 80 million a day. On plateau, we're building a facility that can handle 60, so we can clearly fill that up. And then if we look just 4 kilometers to the north, we made another discovery called the Ibn Yunus field. It's in a shallower section and called the Kafr Sheikh. The pay section is again here. And on test, this well flowed in excess of 40 million cubic feet a day. So, you know, this is a wonderful place to explore. We are 4 for 5, so we've drilled 5 wells down here and 4 have worked, 1 hasn't. So that's a pretty good success rate. And when we look across the rest of the acreage where we already have 3D, we see about 2 TCF of gas sitting in the Abu Madi, which is where we've had the most success. And then we have another 300 to 400 BCF that we're in the process of identifying up in the shallower section of the Kafr Sheikh. And so what we're showing in this slide here is a look at the prospectivity that we've currently mapped in the Kafr Sheikh. And for those of you that are kind of footy inclined, the names of those prospects are the names of the football players for the Egyptian World Cup team. So as you can see, Salah is the biggest and best one we have, and that's probably appropriate. So as we move forward into 2019, we're going to probably drill 3 additional wells into this to add to our inventory of success and fill up that facility even more. So as we continue to have success in this, we're going to bulk up that facility. So at the moment, we're constrained to about 60 million a day, but we can add chunks of 30 million a day in processing. So as we continue to have success, we're going to add to the portfolio here. So we're quite excited about the potential up in this area. And to build on that potential, what we're showing here is a work program that we're starting at the moment. So we've shot 300 square kilometers of 3D up in the north. We're now acquiring another 170 square kilometers to the south. The outline that we're showing this dashed line is this channelized system where we see, you know, in excess of 1,000 feet of good quality sandstone. And so our objective is to find these things in closure. So by the end of the first quarter, we'll have this acquired, processed, interpreted, and then we're going to drill 6 additional wells in 2019, 3 up in the north and 3 to the south. And one of those wells in the north is going to be targeting an oil prospect called Young. So for those in the room, which I recognize a few people that ask me this question every time we meet, we're going to drill it next year. It'll be in the second half of the year, and we're looking forward to it. So it's the Young prospect. It's a deeper Cretaceous oil play, and we are going to drill that next year. So that's it for Egypt. I think we have a great business there. Potentially it's going to expand, but that remains to be seen. Now let's talk a little bit about Morocco, where we think we have another fantastic business. So in Morocco, these are assets we picked up with the Circle acquisition. So with Circle, we picked up Lal in the north and south, and then the Sable permit, and then subsequently we added the central permit here called Rarb Center. We have a 55-kilometer pipeline that takes our gas from the wellhead into the city of Kenitra, where we sell it to industrial customers. And then what we're showing here is the outline of a new 3D survey that we've just acquired and finished only recently. So if we think about Morocco, and Malcy was down on a visit that we had down there, and the way we describe this is simplicity made profitable. This is a great business. The wells are shallow. We produce gas that is called biogenic. It's 99.6% methane. It doesn't need to be treated. And so we take it from the wellhead straight into our customer. We sell this gas for about $10 an MCF to our customers. And our net back on that is about $9.20. So that's, again, a fantastic business. At the moment, we're selling about 6 million cubic feet a day. The pipeline has the capacity to handle 24. We've identified demand of 52 in the city that we sell into. And so we've initiated this project on Catra, Project 24, with the state to fill up this line over the next 3 years to essentially maximize our revenue through this line. When we look at the potential to grow up to that, we have identified 50 BCF of gas potential in the areas where we currently have 3D. It doesn't include the recent 3D. And to fill up the pipeline for 24 million cubic feet a day, we need 45 BCF of reserves. And so we think we've identified those. And like I said, we're adding to that inventory with the recent seismic. We just completed a 9-well program where 7 worked. And in the second half of 2019, we're looking to start another 12-well program. So a lot happening here. Again, this is more of a kind of a summary of where we are. The gas here is sold at quite a high price given the previous price environment. So we sell it at between $10 and $12 an MCF. The reason for that is that there is very little alternative, a few alternatives to our gas. The real alternative is essentially compressed natural gas, propane, that's selling at $18 an MCF. So at $10, we're still undercutting that by quite a margin. We're entering into some new contracts, so we've just signed up 3 new customers, and we'll be announcing the prices in those contracts relatively soon. The biggest one is Peugeot. The car manufacturer has just put a plant just outside the city of Kenitra, and we've started to sell gas into that plant on a test basis. And so that is going to kick off a lot more of development in the area and a lot more sales of our gas. So a lot to look forward to here. The last thing I'll talk about in brief is opportunities we see, what we describe as a roll-up opportunity. So in Egypt, there's a large number of players. They range in size from E&I, who has a Zohr discovery, down to people our size. And so, what we found is that there are a lot of companies, in our view, that are kind of too small to survive. And so our idea is to kind of roll those up together through a series of acquisitions, similar to what we've done with Circle and prior to that with Madison Petrogas, and to create a much larger and much more stable company. Again, we've done 2 transactions so far. Potentially we have another one in the works. So we think this is a model that still has legs even in this current price environment. In a low priced environment, it was fantastic because we were one of the few people that was working in Egypt, but in this higher price environment, we still think it works. So we're targeting those companies that are shown here in that bottom circle, where they're primarily oil producers, relatively small, but have very good businesses because they're primarily onshore. So putting those together, creating a larger company is the objective of SDX. And so you're going to see us, add our reserves through the drill bit and also through some M&A activity. So stay tuned. So to sum up in brief, this is the work program that we've had for 2018. We currently have one rig running still, and that's drilling our South Ramadan well, which is a commitment well, and that well should TD hopefully in another 30 days. After that, the last thing for 2018 is we're gonna start acquiring seismic in South Asuk, and then we're gonna start gearing up for rig programs in 2019, and we're gonna have a 6-well program in South Asuk and at least a 12-well program in Morocco. Gemsa and Maseda, we think, are probably not going to have much happening until the latter half of 2019 with Maseda, but probably nothing in Northwest Gemsa. Valuations are shown here. Myself and I'm sure my other two colleagues at the table in the front of the room here are going to tell you that we're very undervalued. I think we're more undervalued than them, but they will certainly express their view on that. But we think there's a lot of value in the stock. Unfortunately, our stock is suspended due to the leak, so you can't unfortunately buy any tomorrow. But we think there's a tremendous amount of value in the stock, both in Morocco and in South Asuk. So we think it's a great opportunity for everybody. So to conclude, we think we have a strong business at the moment. We've been very successful with the drill bit. We're very well funded. We have a lot of cash. We're generating cash. We have a credit facility that's undrawn. I didn't talk about the credit facility, but the reason we put that in place is to essentially invest in infrastructure in Morocco to connect additional customers to our pipeline. That kind of capital is capital better from institutions that are looking for smaller returns rather than our risky capital. So we entered into that facility. Looking ahead, we see a lot of growth in the portfolio, and like I said, our intention is to exit 2018 at twice the rate we entered, and we think we're on track to do that. And with that, I'll open it up for any questions.
Okay, so questions then for Paul. He's got a few minutes before he has to go. While we're getting the microphone to you, have we got it ready? Yes. Let me just ask. We've got, of course, the legend that is Malcy Graham Wood with us throughout the evening this evening. Obviously, considers and writes about all these companies. Since the issue of valuation was raised, obviously there are different reasons why companies go on and off your bucket list and have your attention. Could you just say something about valuation? Because obviously that's the reason people look for these shares, because they hope that it's going to be worth a lot more in the very near future.
Well, that's what I'm going to talk about later on. No, I mean, the point is, that the valuations of all the companies here tonight are amongst those who I consider to be most attractive in terms of the discount to the valuation that could come through. And I think that the way that I'm sure these that Fiona and Andrew are going to add to what has already been said is that the value of what has already been discovered in the ground is still significantly more than is in the share price at the moment, and on a low rate. I mean, you can talk about $5 in the ground or whatever, but the point is that these are all companies which have assets which have been discovered and a significant upside on the exploration side. So I think these are three perfect examples of extraordinarily cheap stocks.
Great. Okay, well, more from Malcy later. Questions then for Paul. One over here.
You mentioned merger and acquisitions, but have you looked into the recent Egypt bid round at all, and particularly to the north of your South Asuk block?
All right, there's two bid rounds ongoing. There's an EGAS bid round, which is one you're referring to, and there's an EGPC bid round. So we participated and intend to participate in both those. Again, the EGAS bid round doesn't close until the end of November, so at that point in time, we'll make a decision as to whether we submit a bid or not. But both had interesting acreage, and both, I think, are going to attract a lot of interest from the industry, so of which will be one. So we definitely are participating in both. That doesn't mean we're going to bid, but we're definitely participating. So.
More questions? One over here.
I thought I answered your question already.
Good evening, Paul. Yeah, no, I'm not going to ask you about the oil play. Could you just give us an update on where you stand with the gas negotiations in South Asuk? and an element of, or an interest in price?
Yes, so I think we're largely finished with those discussions. You know, again, until we have to put out announcements exactly what they are. There's a minimum price that is paid, and we're not going to get much higher than that price. We negotiated for a good 6-9 months on it. I think we were tossed out of the minister's office 2 or 3 times, so he knows who we are. Yeah, it's with the discoveries that they've had and the success in the Med. To make a pitch for a higher price onshore is a pretty challenging thing. So I wouldn't expect much more than the minimum, the statutory minimum price. And for those who don't know, this is $265 an MCF. So we're going to be thereabouts, I would expect.
Thanks.
Sure.
Can you just say something about political risk in Egypt and indeed Morocco?
Okay, I think Morocco's easy. Morocco's fairly stable, and I don't see much political risk in Morocco at all. It's very stable. It's been stable for quite some time. I think in the case of Egypt, the political risk has significantly decreased. So President Sisi has been in power since 2013, and the economy has really improved. The IMF has put a package of support in place for Egypt that has done wonders. They floated their currency, and so you don't have a dollar short of dollars any longer. So it's decreasing all the time in my view. People are being put back to work. They reduce the subsidies. The economy is healthy. So as we move forward, it seems to get better. It's not perfect. No place is. I'm American, and we can talk about that for a long time, but so no place is perfect. But I think in the case of Egypt, we are much less concerned about the political risk in Egypt now than we would have been, say, a year or 2 years ago. So we think it's a very positive environment, and we think that the interaction between the existing authority and the IMF has been very positive for the economy and for most Egyptians. So we're very comfortable there.
Final question, because I know you've got to run away.
Sure.
Over here.
You mentioned that Peugeot were buying the gas on a test basis.
Yes.
So when would we have clarity as to whether they want to become permanent customers?
Well, I think they're going to become permanent customers. It's just until they take gas on a continuous basis, then then we can sign a contract. Then we'll move forward and we'll announce that to everyone. So there's no doubt that they're going to take gas for the long term. The amount of gas they're going to take isn't huge, because the gas that they're taking is used for a certain part of their facility, which is, it's not that exciting, but it's where they generate heat to dry paint on new cars. And so that's what they're going to use it for, very industrial use. And as that facility increases its production rate, the volumes will go up. The volumes aren't enormous. They're between 500,000 and 2 million cubic feet a day. It's not huge, but it will increase over time when they go from 1, 2 to 3 shifts of cars. And so at the moment they're like half of a shift. So they work 4 hours a day, not every day. And they manufacture a car, they test it, they send it back to France, they inspect it, and then they're kind of kitting out the plant as they move forward. Our expectations is that by the second quarter of 2019, they'll have a continuous run, and that's when we'll start selling gas on a more regular basis there.
And you're expecting to extend the pipeline into Lanham?
That's already done. The pipeline is complete. We've connected the facility, and so we are selling gas on a select basis, not every day of the week, but we are providing molecules of gas to them as we speak.
Okay, well, Paul, thank you very much indeed for finding time. Obviously, a very busy schedule today. We look forward to your shares coming back to trading, and maybe an interesting announcement in the next few weeks.
All right, thank you
Paul,
very much.
Thank you very much indeed.